Hello, everyone. Welcome to the first market outlook of the week. Let me just put, we've just sent out the wrong message saying we're doing a non-farm payroll session. We're not doing a non-farm payroll session. That was Friday. Let me just put the risk warning up. So if you're new to these, we do these normally 3 times a week, Monday, Wednesday, Friday. There's not going to be one on Wednesday this week because I'm away. So we'll do Monday and Friday. We'll do a bit of a catch up from the payrolls on Friday. Massive moves in stock markets Friday afternoon. I did actually do a trade on Friday. We'll have a look at that. I thought if I do it on Friday after the payrolls, it gives us maybe something to talk about at the beginning of the week, the reason for it, and all that sort of stuff. But we saw, so we have the payrolls on Friday. We were doing the live session over those. And the expectation was for 180,000 jobs to be added to the US economy in December. It ended up being more than 300,000. But that wasn't really the reason the stock market surged on Friday. It was more to do with what was said later in the day by the chairman of the Federal Reserve, Jerome Powell, I think, suggesting that because they think the economy might be a bit trickier this year, that they may not be raising rates at the same rate everyone was expecting. So investors saw this as a good thing, and we saw these markets surge. So let's start off with that. I think that risk warning's been up for long enough now. So let's just have a quick look at the stock market. Look at the Dow on Friday. So when did the payrolls come out? So it was 1:30 on Friday. So the payrolls would have been about here on Friday. So a bit of a wobble when they came out, but they did start pushing higher. But it was sort of here, really, I think, where we really saw a rocket put under markets. And we saw this massive move for the Dow. So we went from a payrolls low, post-payrolls low, of about 22,900 and got as high as, how high did we get in the end? 23,500. So we saw like a 600-point range on Friday after that announcement. So the market ended the day up 3%. So I think it does make it interesting going into this week because it was such a big move. Let's take this out to the dailies. You know, there was Friday, this big blue candle here. You'd expect there still to be some more of a positive overhang going into this week. So for me, going into this afternoon, it's fairly quiet so far, but in a couple of hours' time when US markets open, it'd be interesting to see what happens if they come under a little bit of pressure. If we see a bit of selling pressure, do we see the buyers come back out and buy the dip? And that's how I think it might go this afternoon. So I think the interesting trade would be, let's flip it over to an hourly chart for this afternoon. So we've had an overnight. Have we had an overnight low? Nothing really that major. Yeah, an overnight low of about 23,370. If we start pushing back in to Friday's range, maybe down towards 23,200, 23,000. If we do get that low, do we see the buyers coming back out? But I think on the dailies, after we've sold off so hard since October, I think if you picked up, let's pick up on that downtrend since October on the Dow. Let me just delete everything else off and let's start with a clean screen. So I suppose you could pick up on the trend looking, I don't know, something like that off those highs, which is a long way away from where we are now. But the sharper downtrend, let's focus on that since the beginning of December. So let's have a look at maybe a 4-hour chart. So our sharper downtrend from these highs here, 26,100. Let's take a quick look at that on the Dow. And of course, it's going to be pretty much similar for the markets. So the strength we saw on Friday, it was sort of nudging through that level anyway. And I was saying that maybe 23,500 might be a problem. It did break through. It's quite a strong break. So I think for my money, where it's interesting, if it sells back off, do we see the buyers come back in? So I think, we had a massive reaction on Friday. And I think some of that momentum will still be carrying in to this week. So watch the dips, I think, when it comes to stock markets and look to see if we see the buyers come back out. Let's take a look at the NASDAQ So the NASDAQ 100, let's see how the tech stocks reacted. Let's pick up on that. Here we go. So that's down a bit in pre-market trade, but a similar sort of thing. That the downtrend off the highs from the beginning of October is still very much going. So let's take a look at that. Looking, I suppose, hang on, if I could draw it properly. Where is it? Point to point. I suppose if I plonk it up on there, that downtrend has done a pretty good job the last 3 months of holding the market down, but it's broken out of this sharper downtrend from the middle of December. So again, maybe on the upside, we've got a bit more of a squeeze to come. The next obvious obstacle for the NASDAQ 100, maybe up at 6,600, that sort of area. So it's quite surprising, that move on Friday, but a real bullish move. But for now, at least, it doesn't change that bigger picture. So medium term, I think the risk is that rallies are going to run out of steam. Short term, like the next couple of days, let's see if it starts pushing back into Friday's range. Do we see the buyers come back out? Let's take a quick look at the DAX. I was watching the DAX this morning because I was looking to see, because again, the DAX had a heck of a move on Friday. Let's just take a look at that. So here we go. If we look at the Friday low was about 10,470. Then we have the payrolls coming out here. So from the payrolls, it moved a couple of hundred points by the close of business on Friday. It's been selling off today. So it did get as high as 10,845 this morning, about 7:30 this morning. It's dropped back about 150 points. But I'm also wondering, going into this afternoon, we are seeing the DAX, the German market, over the last hour and a quarter, holding around 10,690, 10,700. So will we see, if we see a positive start to US markets, will we see buyers come back in on this? Let's see what happens. There's a lot of retracement we could have because it was such a massive move on Friday, but maybe everyone had such a positive end to the week that they come into this week feeling a little bit positive as well. Let's see what happens. So there's stock markets, watching to see how they perform on the dip. When it comes to major announcements this week, Wednesday, we've got Eurozone unemployment. Wednesday afternoon, of course, as usual, US crude oil inventories, 3:30. In the early hours of Thursday morning is going to be interesting. 2 o'clock in the morning, Thursday this week, Chinese GDP. So how well is the Chinese economy doing? And of course, concerns about a slowdown in China have been overhanging stock markets in recent months. But 6.5% is what we're expecting the Chinese economy to have grown by in the last year. And that's announced 2 o'clock in the morning on Thursday. Then Friday morning, UK GDP on Friday morning. So how well or how not well is the UK economy doing? Let me talk about the trade I did on Friday afternoon. If you were on the payrolls webinar, I said it's always difficult to call, and that maybe the sensible way to trade the payrolls is to wait, give the market time to calm down, because very often the first move is the wrong move. So the trade I did was buying the euro and against the dollar, and it's a really simple idea, to be honest. So it's still running. I did it on this account, the account I use for these sessions, just to give us something to talk about today. So it's up about 83 quid so far. It was 50 quid risk on the trade. There it is in there. So bought at 113.65 the euro. So it was down here. And the reason for the trade, we saw those payrolls come out, and much better than expected, suggesting maybe a slightly stronger US economy than we first thought. And this was seen as good for the US dollar. So when the payrolls came out, where was the level? Am I looking at the right day here? Sorry, no, it's here. What am I talking about? Here, let me make this a 5-minute chart, 15-minute, make this a bit clearer. So here was the move after the payrolls. So the market, euro dollar, was trading about 114, and it dropped down to 113.60, 113.50, that sort of area. But the trend for the euro for last week had been up. So since January the 3rd, we had been gradually pushing higher. And even though the market sold off quite heavily, it held above the previous day's low. And I'm a big fan at looking at previous days' highs and lows, to see short-term support and resistance levels. So I bought it at 65, 113.65 on Friday, about 3 o'clock, with a stop loss under the low from the previous day. Yeah, so not rocket science. The market had pushed higher, sells off to where it had turned around the day before. We were seeing a little bit of strength creeping in. You can see it maybe a bit clearer on the 5-minute chart. Here we go. It's this sort of bit here. Yeah, this is Friday afternoon. So spent a good half an hour just holding around 113.50, holding above the lows than the previous day. I bought, and then flukily, that's when the market started moving pretty soon after, just on the back of these suggestions that maybe we won't get the interest rate rises in the US that we first thought we might get. So that was seen as potentially bad for the US dollar, good for the euro, and the market surged. So it's pushed higher. So at the moment, I've pushed, I can't even remember what my stop is. My stop's at 114. I think so. If the market continues to push higher, I'll just trail the stop up. But I think it's quite interesting that we did see the euro bounce back after that. So the payrolls gave us the opportunity, but not having to trade over the payrolls, having a bit of patience and waiting for the market to calm down. So let's take a look at the euro properly now. Euro dollar going into this week. It's been a bit of a dull time, I suppose you could say. This is a daily chart we're looking at. So since November, this market has been trapped in this sideways range. 115 at the top. So November the 7th, 115. The highs, December the 20th, and again Jan the 2nd. So 115 is a real barrier for euro US dollar. It's currently trading at 114.40. But on the downside, lots of support, 112, 112.70-ish, that sort of area. So we need to break out. I think if it starts to move above 115 this week, it starts to get a lot more interesting. We can look at, maybe a much stronger recovery, but let's not underestimate how much of a barrier this has been. But that's the level. While it's still strong, that's the level to watch on euro dollar. So I suppose if you wanted to sell short the euro, watch for weakness over maybe this afternoon and tomorrow ahead of 115. Because if you're going to go short, having a stop above 115 seems to make sense because it's been such a strong barrier. So it's been pretty dull over the last few weeks, months, but there have been opportunities, and I think there was a good opportunity off the payroll sell-off on Friday because the market held above these levels and is pushing higher. So my short-term target is for a run back up to 115 and then see what happens. If it goes bursting through 115 and I'm still in, then I'll just trail my stop behind. So I'll update in the next session we're doing on Friday this week. I'll update and we'll see how that trade did. Now, pound US dollar. Parliament in the UK is back in session. So all the politicians are back after a very long holiday. And once again, we are going to start hearing about Brexit. So we can expect the volatility to come back. So let's flip this over to a daily chart and see what it looks like. It's a little bit messy, to be honest, but let's zoom in. If we zoomed in over the last the trends have been all over the place. It breaks out of trends, then it has this knee-jerk sell-off again. It's a really, I think, difficult, choppy market to trade at the moment. In the short term, let's flip it over to the hourly chart. Some of the levels to watch this week. I think the obvious one is going to be the highs from the end of the year, just above 128. So we're currently about 68 points below that. I think if we can break through 128, there's a few little barriers, 128, 128.40. It maybe opens up a stronger recovery. I still think if I was a betting man, my money would be on the pound, famous last words, being higher at the end of March than it is at the moment. Let's see how that works out. So it's 127.50 at the moment. I think all the no deal stuff has been priced in, I think. So how bad can things be? Famous last words. So maybe we'll see something of a recovery for the pound over the next couple of months. But let's expect it to be knocked about by various Brexit discussions and all of that sort of nonsense. Oil. I think oil is the interesting market to watch this week. Let's take a look at that. I mean, stock markets are always interesting anyway because of the volatility. But let's take a look at the price of oil. If you've been on these things for a while, you know about this fantastic trend we've seen for oil. It hit 4-year highs 3 months ago at $77 a barrel, and then on Christmas Eve it was down at $42 a barrel. So we'd seen this relentless slide for the price of oil. But over recent days, we're seeing, maybe the first hesitant moves, although we have seen some strong moves, we're seeing maybe the first moves to breaking this downtrend. And I think for oil, the level we need to keep in our heads, and it's a really easy one, $50 a barrel. It's currently $49.50 15-ish. I think if it can break through 50, that's a sizable rally. It's a 20% rally off those lows-ish at 43, maybe not quite 20%. But if we can get through 50 and hold 50, I think it starts to look really interesting for a much stronger recovery as the year goes on. It's not there yet, but it is still strong in the short term at least. Let's flip this over to an hourly chart. So if we had a look at it from these lows, sort of Christmas, Boxing Day lows, let's just pick up on that. And the price of oil is still chugging along. There's our little trend in oil. There we go. So I think, even if we saw it sell off a couple of dollars from here, still looks like a buying opportunity. It's pushed out just today to new highs for this recovery. So the price of oil has today been in its highest price, well, only in the last couple of weeks, 2 or 3 weeks or so. But it's a lot more positive than it had been. At least it's not falling off a cliff. But we have seen stability before, of course, only to see it plunge lower. But this does feel, again, famous last words, a little bit different. But let's see what happens. I think we need to regain those $50 a barrel mark, and then we can start looking at maybe a stronger recovery. But for now, any weakness back toward, I think, anywhere from these old supports in between Christmas and New Year, from 44.5 up to 46, looks like a buying opportunity. So actually, a bit of a knee-jerk sell-off could be an interesting one for oil to see if the buyers do come back in. So I think it's a really interesting market to watch this year, oil. And then finally, gold. We've talked about gold quite a bit because we've had this fantastic recovery that's been going on since the August lows, 1160 an ounce. The market volatility and uncertainty has been helping the gold price. Bit of a wobble last week. That was on the payrolls, I think, because initially it was seen as positive for the US dollar. If the US dollar goes up, the price of gold goes down. So we had that at the end of last week. But again, today the buyers have come back in. So it ended last week about 12.85. It's moved about, $6 higher today. That trend is still very much up. And I think for me, that's still a recovery market, like as with oil, potentially with oil, but gold is still the market that's in recovery going into this year. It's still really overbought. We've looked at this a couple of times over the last couple of weeks or so. Still really overbought up here. So if it is due a correction, but any correction for now down towards the low 12, even if it lost $50, $60, it's still in that recovery. So I think it's looking a bit overheated. Could do with a pullback, but it's a market I would be looking to buy the dips rather than sell into any strength. So we'll see. We'll see what the rest of the month brings for the price of gold. But again, if we get more stock market uncertainty, you'd expect the gold price to continue to rise. And that's it, really. So it feels like a bit of a quiet start to the week today after all the excitement on Friday. But I think for this afternoon, let's see how those stock markets perform if we get a sell-off. So let's just bring the Dow back up. So if we have a bit of weakness this afternoon, it's a little bit weaker overnight, but nothing drastic. The lows from Friday were about 22,900. It's 500 points above that. Let's see what happens if we see a sell-off. Do we see the buyers come back in? Interesting. I'm just keeping an eye on the DAX on the other screen. The DAX is still just about holding above that 10,700 mark area. So that's going to be interesting going into this afternoon. If we do see a strong start for US markets, we'd expect to see something of a bounce off here. And the price of oil, to see what happens if we do manage to reclaim $50 a barrel. So it's a calmer start to the week than we had at the end of last week, than how we finished off. So we'll wrap things up there. So the next one that we're going to do is going to be on Friday. So Friday 12:30 is the next live session. I did put a video on our YouTube channel at the end of last week, which was looking at the winners and losers, what was hot and what was not in 2018. So take a look at that. I think it's about just under 10 minutes long. So looking at what markets performed well, not very much in 2018, and their prospects for the year ahead. And of course, to never miss out when we do all this stuff, just make sure you're subscribed by clicking the subscribe button on YouTube. To open an account and get access to all these markets and the platform that I've been using today, just go to our website, Capital.com. You can open a real account, open a demo account. Clearly, there are lots of companies in this day and age you can trade with. But I think with us, one of the benefits, you can trade really small. So if you really want to trade, fractions of contract sizes, like a 1,000 position in the euro or something like that, tiny trade sizes you can. So for people who are new or who don't have massive account balances and want to keep the risk low, I think it's good for all of that. So go to the website, Capital.com. Any questions about this, just leave us a message underneath the YouTube video when it goes up, and I'll check back and answer them. But we will wrap things up for today and come back to it on Friday and see what the week looked like. Thanks for coming along, and hopefully see you at the end of the week.